Hello traders, this is Rich from Tradesight. This is the market preview for the coming session. This is going to be for Friday, January 31st, 2014. One thing to keep in mind though is it is going to be the last day of the month, and a lot of times we get our markups in our window dressing not the day of the last day of the month but the day before, so the levels that we're seeing today could be reflective of that. The ES was up 10 handles on the day. The NASDAQ side was up 29, which gave a little relative strength back into the NASDAQ market. Market internally was very good, plus 1,600 issues on the New York side, and plus 1,300 issues on NASDAQ. Here's a look at the ES futures, which definitely took a turn for the better today to some extent. One thing to notice though is today's candle is a dark body candle, so while we had a wide-ranging day with a small body, we did close below the day's open. If we do continue to the upside, the 10 EMA is going to be important. That's going to come in about 17.99. To the downside, the static trend line is really the big level in play here. So if we do continue to the downside, 1761 is going to be the big number there. The NQs kind of sloppy. Closing in the bottom half of the day's range. We did use the 10 EMA, so again tomorrow that's going to be a big level if we do get up and reach that. So about 35.35 is going to be the level for the 10 EMA. To the downside, the range low of the move so far at 34.55, and then more important support at the 4/8 level at 34.3750. Oil futures today were pretty strong, pushing up a little bit closer towards that key level. And then remember, the key ascent target is going to be the 200 DMA and the static trend line. So for now, we still remain short-term positive. If the oil futures roll down tomorrow, we're going to be looking at the 2/8 level at 96 7/8 for support there. Gold futures were pretty weak today, closing back down below the 10 EMA. So we're back down to these being the whipping boy and the source of funds for now. Here's one little divergence that should be noted, that while the market was up today pretty nicely, the trend was also up on the day. We're at 1.15. What they did was it elevated our 10-day average back up to that 1.35 area. So there's still a lot of oversold energy in the market, at least measured by the 10 EMA. So there's plenty of room to go here before we wind up getting anywhere near overbought if the market wants to make another push to the upside. Starting to see a little bit of evidence here that we're starting to get a little bit more of a risk back on in the market here. Here's the S&P TLT cross. So we get back above this little wiggle here, where we broke down from in the ratio, we can definitely say that this may be returning to more of an upside and more of a positive risk-on condition, which would be bullish for stocks overall. All right, here's a look at the multi-sector daily chart that'll telegraph how the different sectors performed today. Definitely the big performance today was the BTK. That's the red line. Good performance there. The semiconductors, the banks were all up, but to a much lesser degree. The XAU obviously was a source of funds here. So again, a little bit, I'm starting to see some a little bit better of a risk-on, risk-off, risk-on rotation, but really needs to have a couple of days of this before we get a trend. Remember, one day does not make a trend, guys. Here's a look at the sector watch on the watch list. This is going to show us the relative performance. We're going to little more detailed review here. BTK, Top Gun, utilities were up near the top. Transports were very high up on the list, which is really welcome after the poor performance that they've had. Need to see them kick back into gear. Semiconductors had a good day. Would have liked to have seen the oil services a little bit higher on the list. The XOY was also fairly weak. At this point in the move, we want to see them start to exert themselves a little bit better and start to have a better turn, but that's not the case right now. So that's definitely going to be a cause for concern going forward. Gold and silver, the XAU index was the last laggard by a huge margin. Let's take a look at the individual sectors here. First up, let's look at the XAU. XAU was last laggard, but it's still kind of just pinching here between the moving averages. So we're between the 10 EMA, which is still positive, and below the 200. So while we did have a pretty decent down day, this really doesn't do too much to move the needle as far as the classic analysis goes. If we do get back above this 6/8 level, we're going to put this 200 period moving average in place pretty quickly. I'm going to take a look at the XOI. XOI is trying to pivot here, but you can see it's already lost the static trend line, so it's trying to pivot back up here, and it's got to really get back above the 10 period moving average before this gets interesting to the upside. Got pretty good support here at the 200 DMA, which is still positively sloping. Here's the oil services. The oil services is definitely more volatile, even though it's in the same space as the XOI. This one's now 6 days down, and we're below all the major moving averages. We're into the oversold territory, but unable to pivot to the upside just yet. Really need to close above the 10 EMA to really get this to qualify as a short-term positive once again. Here's the semiconductor index, which was a pretty good performer, but you can see the chart is still pretty sloppy. If we head back to the upside here, we got to be a little bit cautious that we could be just getting a B wave bounce. Here's the A wave down off the top. It's a little bit shallow, a little bit short. Would have preferred to have seen it interact a little bit more aggressively with the 50, but it didn't. But just be careful here, because this still could be an A wave bounce back to the upside. The other thing is the market has going for it here in this particular sector is we don't have a bar count in the way. So if we saw this pattern setting up with a bar count on top of it already indicating exhaustion, we'd have a little bit better chance of seeing some sustained downside. Here's a look at the transportation average, which was fairly strong today, but we're still more or less boxed up. We did close just above the previous range, and certainly the best close in a couple of days, but we have to get back above that 10 EMA before we can really start talking about getting positive again. Even once we do so and get back above that, we're going to have some pretty decent resistance at that 8 days level at 7,500. Finally, here's the BTK. The BTK was really strong today. Pretty good gap up on the day. Lexion was really strong today. ALXN and a number of the other biotechs were also strong to different degrees. If we get back up to the old high here, just keep in mind that we're back into that overbought territory. See, we closed already at +1/8, so we're already starting to feel the. We're going to start feeling that resistance again pretty quickly. The MACD didn't really have much of a chance to roll down here and recharge itself, so just be aware that this could be more of a bounce in a retest than just an outright resumption of the trend. Probably going to need a little bit of time here to gain the old high if we're going to break out to new highs before we do so on a clean basis. All right, folks, as always, thanks for listening. This has been Rich for Tradesight.